Hey everyone, just give me a sign if you can hear me all right. Hello everyone, just let me know if you can hear me. Hello, let me know if you can hear me now. Hi Pendy, hello Alan. Can you all see the chat? Super, super. Okay, so we'll start in just 2 minutes. We'll let more people coming at the round hour, and then we'll start. Today we're going to do a short session because Saul is going to host a webinar soon, so we have to give him the system. So we'll do it quick, but with quality stuff. Okay, everyone. High five to everyone. Thank you for showing up for today's trading room session. My name is Gil. I'll be doing the trading room today. We are going to make it a little bit short because Saul is going to host a webinar very soon on investing.com. If you are a Spanish speaker, then you are invited to for that webinar over his. It's going to be in the next hour at investing.com. Anyway, today's session will begin shortly, but first we have to say our disclaimer. We are here just to show you how we are trading. In no way that we are going to expect you to learn what we're doing. There's several ways to learn how to trade and do your trading. We're not going to encourage you to trade our style. We are sharing the way that we're trading and our trades for real, so you can have more views, and we trying to achieve a broad discussion about trading. And because we love the trading spirit, we invite you to take a look over our shoulder. I always invite you to showcase your own trades on these sessions. So if you would wish at one time to show your analysis, your thoughts on the markets, your trades, and share why you're taking these trades and reason with it. And I think it's going to be a great thing. And we hope to create a very good tradition of traders community here. So this is why we've opened up our trading room to all our traders at The5ers. So that's the purpose of this trading room. And so if you want to share or say anything, just raise your hand and write me something on the chat, and then I can broadcast you. As I said, today it's going to be a shorter session, so let's just get started. So first thing first, I've taken a few trades in about an hour ago. One was a limit order on the Luni on M1. You can see my entry, which was very precise. It was with a limit order. I put it here because of the supply area that is represented right here. Looking at the H1, I can see prices struggling through and ranging, and when price is ranging, we would want to take the extreme of the ranging borders, and this is what I'm doing now before price is going to convict any other way. When we're looking at H1 or a higher time frame for the Luni, the bias is going downside. We see this very big spikes going up, but if we carefully look at what this rally actually achieved, it actually went and to the next supply the same way, the same pattern. It was just climbing up, taking supply, and continue to breaking lower lows. So I assume that by managing risk toward the selling position, that would be wiser. So I have like two different odds in my favor. First, with the higher time frame incentive, which is to go down. And second, with the low time frame, I've seen these ranging areas, so I took the range edges, and so for now it's working. My target is within the range, so I believe that even if price will try to spike me around this, this target is still achievable, even if I'll take some drawdown on this. Maybe price will try to fake out this range and go back there. So so I think the odds are with me on this. So it's a confluence of two things. Like I said, the main bias going down, ranging, not managing to break any significant level on top. My target is within the range, so I think I'll be good to get my 15 pips. If you follow me, my way of trading is to collect 15 pips. So I'm collecting 15 pips. I'm risking about 30 to 40 pips on every trade, but because I'm taking these on the extremes, usually I get a very high success rate. So with that, I can retain being positive. So when I take a loss eventually, and losses um, are there, I'm not perfect like anyone else. So I'm still a profitable trader because the way I manage my risk, which is very solid and tight. Um, I don't break my rules, and so this is how I trade. My daily goal is to take from 2 to 3 net positions with success. So the Loonie is advancing pretty well as I see, so we can move on. Maybe we'll catch that TP soon. Let me show you my other trade, which was not the prettiest one. This is the um, the kiwi. The kiwi, I was taking it right about here, the first trade, and it didn't work out for me. But it within my stop loss, which is around 40 pips. It's 24 pips stop loss. I found another area where price should be stopped at, another resistance zone, which is a supply zone. I placed a limit order and price spiked in here, and then eventually it went down very strong, and it plays around these areas. So the wise thing to do that I should have done is, once price is getting back here, is to close the lower trade at break even, and that would have released my tension from that trade, like we are just now. We're about to have this situation where we can close this, but I can still see that price is pushing very strong, and I have a good feeling. I'm not saying that I urge anyone to trade by gut feeling, but with my perspective, um, I can see that price is pushing down. What I'm intending to do is, once I get my 15 pips from the top trade, I would probably also close the lower trade as well for lower than 15, but that would give me my 15 for the loon, for the kiwi. I see some questions, so let me just stop and read. Yeah, I see somebody is excited for creating a community. Yes, this is our goal for the next quarter. Until the end of 2020, we are going to invest a lot. We're going to invest a lot on our trading. We're going to give you a lot of attention starting now and on forever. Whoever has just participated in our program has an access, a lifetime access to everything that we do as a community. So in that way, we're trying to provide you much more value than just give you funding for trading. We want to actually create a very savvy trading community that is practicing day and night trading, because this is what we love to do. So yes, we're going to do it. One guy here, Bruno, created a 5ers channel on Telegram. Yeah, it is a good idea if you want to gather and talk and discuss things. That would be super. If you want to invite us as well, or you want to have your own privacy, we respect that. Whatever you choose, we'll be happy to participate in that as well. Remy, with my risk management style, what is my average return month to month? Um, well, to be very, very honest with you, Remy, I'm not very active in trading for the past years since we've created the Fivers. I've created the Fivers because I am a trader, but then the business went on top of this, and it took all my spare time. And now the Fiverr is prospering, and everything is working, and everything is aligned, and uh, we we have a good feeling that we've established the brand, and we're well known, and people are feeling good with what we do, and now we get more time to actually be in the trading. I am in the trading and doing some webinars only twice a week, and my other colleagues on the team, Snir, which is he's a partner, and Saul, which is our senior analyst. We're all sharing this trading room, and so I'll be here for once or twice a week. But so I'm not maintaining a steady portfolio. So I cannot tell you um, what's my average return. Okay. I see Bruno had opened that channel, that Telegram channel. Yeah, excellent. Join it, discuss things, discuss trading. If you have good insights, share it with us. If it's okay, one of us can join. You tell us if we're allowed in. Anyway, what's going on with Looney? Looney is jittering here and still looking downwards. It takes time. Price always need to do this before it goes down, so I'm patient. We'll see how it goes. Also, the Kiwi is not evolving very well. If I see price actually breaking this level, this flagging, maybe I'll close the lower portion at loss and give a chance for the bigger one. But I still see the pushing downwards. It's not really convicted just yet. So let's see what's going on. What else? Oh, by the way, Soul reminds me to tell you that we've opened up another good service that any one of you would like to consult with Saul as a portfolio analyst. If you want to share your dashboard, your trading performance with him, and get his insights, how he looked at this, and help you out building a solid trading plan and a solid risk management that is aligned with your trading system. We're not going to enforce you on anything but your own system, okay? But we believe that money management and risk management and mentality are layers above, which are universal, and that they can apply to any trading style. And if all of you had joined our program, it means that you agree to the risk parameters that we outline in our program. So we all can share the same trading plan, risk management, broad parameters, but now we need to make it specific. Saul is going to work with you on this, and in a confidential and very accurate way to provide you your goals for this. So if you want, on your dashboard, you have this area where you can reserve a meeting with Saul, and that's about this. Okay, so on the yen, Japanese yen, I've marked this Quasimodo level, which is not a fully qualified Quasimodo level. For any one of you that doesn't familiar with the term, Quasimodo is where price is coming up, retraced, pushing up, faking out that break, and then breaking below the last retracement. That is something that looks similar to head and shoulder, but only awkward, a little bit skewed, and where the left shoulder is where supply and demand orders are being held right here. What the thing that doesn't qualify this specific Quasimodo is that when price was faking out and breaking down below the retracement, it didn't achieve any significant breaking of the next level below. It didn't actually had broken a demand. And as we see, even though it's not very convincing upward move, price was bouncing on a demand, meaning that demand is fueling this moving up. So that would at itself will give us a warning sign. But I've marked it just for education because these Quasimodos can work regardless of things. Now we see it's really happening, but not reacting the way we wanted to. And here we see basing, which is all compressed down below. The range here is also not very good in terms of my trading strategy, which doesn't provide the 15 pips, at least to the bottom of this structure. So I will not take it, but I had a feeling that it might work. So this is why I marked it, and I wanted to show you this without taking that trade. If price would go a little bit lower and breaking these lows, I think that would have signed for better odds for taking this. Another thing that would help for thinking short on this short-term Japanese is that this whole area seems very consumed. The whole demand area seems consumed. You see that there are no real demand here left untouched. And this kind of promise that once there is a decision in the market to go lower, price can just slide through this area very, very fast, considering the time it took it to get all the way here. It's very important to understand what is this bounce about. So what I do usually when I look at this formation, I mark the very tip of this, and then I start going upwards to see why its price is bouncing, because in my understanding, price will react at at historical price levels. So if I don't know why price is reacting because it's coming into an empty left side, I don't see it, it's probably further left out there. So I'm going and scrolling down, and you see that the very tip that we've marked is actually on a fresh supply that was in a mid-range drop. So it is a fresh supply right here. Let me just, okay, you see this this flagging action, which is this is the whole flag right here, and we see that price was retracing from here and then retracing from here, and here we see a little bit below. We can just fix it a little bit, and right here, if I would create my supply zone, I would create it right down here. So price had slightly had broken that, and now is reacting to this. The mid-range flagging, I consider them as reaction providers. Sometimes they do create massive massive reversals, but I'm not considering them as ones unless it happens. So, but these areas, these are like steps where price must give some sort of reaction. As long as there's no exaggerated liquidity in the market, if there's no news or anything, and price is rather far from this, these areas will react as long as the order flow balance is clear here, fresh and clear. So this what explained me this bounce. And so if we were just brainless having a limit here, then we could earn some 17 pips. It's not that great, but if price would react better, I would expect it to break that low, and that would be validating this Quasimodo, and then we could have think of taking it. So back to the Kiwi to see if it catches our TP. It's right there, like 0.9 pip to take it. Let's cross fingers for it to take it. Yes, we did. Okay, so I will close that other trade with 7 pips manually. I don't want to be greedy. It's a disease I've recovered from a while back. So I'm taking what it is. I just want 30 to 40 pips a day, and this is it. So we have 1.5 trades for this right now. We still have that Kiwi continue to jitter, but it's still within the area that is okay, which is below this supply and within the range. I hope it will take it. To be honest, I'm not feeling quite comfortable with it, so maybe I'll just close it in few moments. Let's see what else we can find. Okay, GJ is, let's see, what is it bouncing off from? We see this flagging the lower border of that first flag with a very, look like a very strong supply right there. So price is bouncing off the very low tip, and we see that once it reacts to this area, price is going a little bit lower, but not really breaking the lower demand below. So that is still showing us that price might want to check the latest high, or to go all the way into the supply zone and take maybe take some stop hunters from here above and just take higher prices from here. Anyway, a rejection or a reaction is expected at these levels at 142.98 and at 143.21. So this is looking at by H4, and a good trade to take is right about here. I do need to go into that source and see and make it more accurate. So supply can be defined by these laws here, and also supply can be defined by this decision right about here. So we have two different opportunities to take on this flag. If anyone attended my flag and pole seminar, then we've discussed it, that every flag has at least three areas where we can actually take our trades. One is the very conservative, that will give us more probability to be triggered, but less probability to be succeeded. The decision point, the decision for that retracement to end, which is within the middle of the flag. And then, so that would be giving us less probability to be triggered, but better odds and less risk and better risk reward ratio. And the very tip of that flag, let's just the very tip of that flag is where you would get a superior risk reward ratio, but it's not always actually retesting these very tips. So it's a very low probability. It's not very low, it's lower probability to receive these trades. So any of these three are something that you can consider enter. It's really depend on your risk appetite. And of course, you can take all three of them, but don't be greedy. Just consider this as a one single trade and just split it into three. Don't be greedy. The market has enormous, vast amount of opportunities if you're looking at the market like this. And so there's no need to be greedy, and greed is something that is just a destructive, toxic thing to work with. So don't try to push your equity curve faster. Be patient and work with price action, work with the market, and you will get enough opportunities, good opportunities to go. There's no need to rush. Okay, so Looney is working against us, showing its a real intention. I know for I feel it that it's going to break this range. It looks like this. If it will, I think I will close it at -50 above this red line, because I see it's pushing very assertive On top of this, I think I can let it go without waiting for my stop loss. Yeah, let's just take it. Right. Okay. I think taking a loss like this is something that makes me happy. I know it was within my risk management plan, so I've done a very good job and I should be proud of myself. Although it's a loss, it's not a fail. It's because we're not gods. We cannot predict the market. Nobody can, and this is not what we're trying to do. We are trying to understand the market, flow with the market, and take and manage risk at the best we can. So the job is managing risk, and closing a trade that doesn't look good is managing risk. So I've done my job. So we really must end for today. I'm sorry for the short session, but Saul needs to take this Zoom application to work out his seminar. If you're a Spanish speaker, you're very much invited to go to investing.com and sign up for this webinar about scalping. I'll just take a few moments to answer questions and then we'll end up this session. So David asking about the Telegram. Yes, I think Bruno had posted that Telegram. Feel free to join. Gregory, since you are showing your specific trading style, I think it would be helpful to have a link to where we can learn the basics of your style. If it already exists, can we get a link? Yeah, Gregory, if you go to our YouTube channel, it's on the footer on the website. You would have that a link of the for YouTube, and we have a recording of all the webinars sessions that we've done ever since. So the few latest one we've done on investing.com, we were discussing supply and demand and some scalping techniques that I'm doing using the supply and demand order flow theory. And I think the second session is about flag and poles. So you can go there and see the webinar. It's about an hour and a half where I just go and dig into that. And starting next Tuesdays, I'll be hosting more webinars about the basics of supply and demand on investing.com. So, of course, you're welcome to join. But it is very important for me to tell you that I think each one of you that had joined our program has some specific trading plan. It's very important for me and for all the team here at the 5ers to not give you, to not confuse you with new ideas. I believe that most of you that came into our program are having an established trading system. Supply and demand is not a substitution for a trading style. It's a way to read the market, but it's very important for us not to get you confused. So before you actually decide to watch these videos, just remind yourself that you're not going to be confused, because we want you as you are, unless you want to learn more, which is very much recommended. So, so thank you so much for being here today. At the end, we were taking 2 winners and 1 loss. One winner one loss of $11, and two winners, one for 690, one for 15. We're positive for the day. If I had more time, we could find a few more opportunities. Thank you so much. We'll be here every day, Monday to Thursday, the same time, just before the New York bell. And so I will see you tomorrow. Bye-bye.